Good evening, guys. I'm sorry for the delay. I'm extremely sorry due to my system issue. I I couldn't log in on the time. I'm my sincere apologies for the same. And now I think I am on live. I believe. I don't know. I'm not able to see the comments also. Just a moment. Hope you can hear my voice. Just a minute, guys. Hope I'm live. Why this is not connecting? Just a minute, guys. Okay, okay. Can you hear me now? Can you hear me now? Am I audible now? Guys, please respond. Am I audible? I was taking the classes for so long. Am I audible now? Am I live? What is that issue, yaar? I don't know. Yes, I'm. Guys, can you hear me? All right. Am I audible? All right. Okay. Because due to my network issues, I didn't switch on. Because if I switch on my camera too, it is very slow today. So that's the reason I didn't switch on the camera also. So please bear with me today. All right. Now coming back, last class we were seeing about the basics, right? So before I'm going in a flow, how the accountancy will be. In last class, we have seen that there will be a event, that is, event means a transaction. Then for that transaction, there will be the supporting documents you need to collect, which is nothing but vouchers. And then you will journalize the same. And once you journalize, what will happen? It will be transferred to ledgers. From ledger, we will be preparing trial balance. From trial balance, we'll be preparing the financial statements. This is the entire accounting we will be doing. Inside this we have so many things, like what the how you have to pass the journal entry, how you have to prepare the ledger accounts, and all those things are there, correct? So for you, only in few cases you will be coming up with journal entries. All right, I have already told you in your syllabus itself, like bonus shares, right shares, ESOP, in only in those cases you will be coming up with journal entries. So for those, whatever we have done as a basic, like the debit and credit, those rules are there, na? All right, that how you have to, if money is coming in, what you have to do, if money is going out, what you have to do, if you're purchasing an asset, what you have to do. So those rules and regulations are there, no? Dead and click we have studied, you remember? Debit, credit, all those things. That is more than sufficient for that syllabus, all right, for that particular chapters. It's not like they will ask you very what is that account, what is this account. It is not like that. So here in this class, what we are concentrating is, we are concentrating only those basic things which is required for your syllabus, which is required for you to understand and work on your syllabus. That is the main intention of these sessions, whatever we are going to have till your exams. In these sessions, only this much. So what my request is here is, I have framed in such a fashion that it starts from the beginning. Like first we saw the basics, then we will be understanding what is meant by financial statement, what are all the different components of that, what is certain principles of that. Once that is done, then we will be moving slowly with your syllabus. Probably you're getting it. Now what I wanted from your end is, you will be studying, right? You will be having your syllabus in your hand and you will be studying, correct? So whichever you find it difficult or you are not understanding, you are getting it, so you please come up with those questions, so that we can make use of this session. You can use the session as useful, or as you can capitalize this session. You are getting it? If I want to put it in a right word, capitalize. You can use as much as possible to gain your you can clear your doubts. You are getting it? All right, so you please go through your syllabus. You are getting whatever you have, you please go through your syllabus. If you don't have notes or something, Oliveboard is also having the notes. Your they have, from very basic I only prepared, so very basic it is there. Go through the notes, read the syllabus, read the chapters. Whatever you have doubts, or where you, ma'am, I need here, I need your guidance here, or I need this particular chapter to be done, I'll do that. With numericals we can do that. Yes, I will bring MCQs also, because we have started now only, Eva. So I think three classes, I believe this is a third or fourth class, I guess. Yeah, definitely I'll bring in the MCQs once we move on to, little advanced, little more into your syllabus. You're getting it, right? So we'll be doing it. So we can plan accordingly. Like in a lecture, in an hour's class, we can have 45 minutes of lecture, doubt clearing or whatever it is, and next 10 to 15 minutes we can have it for MCQ questions. All right, we can solve that, various questions we can solve, no problem. Hope that helps you, correct? All right, now coming back, first thing, like we know that Now, what is it? This one is very much related to your another syllabus called, another chapter called preparation of financial statements. Guys, please understand what is meant by financial statement and why we are placing so much importance on that. It is like your health report. You're getting it. When you go and do a testing, when you in blood test, or when you give some medical test, doctor will give you a report. Correct. You are having so and so. You are having so and so. You are having so much diabetics, BP, cholesterol, everything he will give no in a report. And if you see the next to it, they will give a normal ranges, whether you are exceeding or whether they are doing it right. Why they are doing it? Just to make sure you are healthy, just to make sure you are healthy and your body is okay, and nothing is gonna, there won't be any surprises later on. Correct. No surprises or shocking later on. The same way, if the company, every business house, forget about company, every business house, they should know what they are doing. Correct. They should know how they are performing. Correct, no, guys. Even when you are working, after an year, you will be checking no appraisal. Will it come? Have I met the expectation? Have I exceeded the expectation? What they will give? You will be waiting. Correct. The same way, it is like a report card. That's it. So this financial statement will help the readers. Okay, I will tell you who could be the readers. Readers could be anybody. Government could be the readers of the financial statement. They will, users. Readers means users. Government could be the users of financial statement. Creditors and your employees and your lenders, money lenders, and your shareholders very much. Yeah, all the tax authorities, all the any governmental authorities, ministry of corporate affairs, that is MCA, everybody. All right. So for everybody, your financial statement is required. They could use it. So that financial statement is nothing but it is a report card of a company. From there, you can do so much things. Yes, suppliers, of course. Yeah. Ma'am, why it is required, ma'am? Where it is? It is simply one paper, it is simply one report. Who will be using it? No, you have one chapter called ratio analysis. That ratio analysis is, you can do only from here. Ratio analysis can be done only when you prepare a financial statement. Without financials, you cannot prepare what? You cannot analyze ratio. You cannot do anything. Ratio analysis cannot be done. Because that ratio analysis itself is, there are ratios called balance sheet ratios, income ratios, and then interstatement ratios. You're getting it? So financial statement is the next basic step for you to proceed further. And now, what is meant by financial statement? What are all the components there? What are all the statements you will prepare? Yeah, that is what we are going to see here. And how you have to prepare. It is not that you can prepare however you want. No. You put wherever you want. No. Everything has its place. Assets means it should be disclosed here. I told you what is meant by disclose in the earlier classes. Remember that. So assets means where you have to disclose. Everything has been prescribed. Where, ma'am? In the Act. In Companies Act, it has been prescribed. In accounting standards, it has been prescribed. You are getting it? Right? So please make sure you are very well, good in these financial statements. Why? Because this will help you in solving your ratio analysis. Because in ratio analysis, there are few questions. There are few ratios, a balance sheet ratios or income state, not few, everything. The formula would be like this. PE ratio. MPS by EPS. Ma'am, what is meant by EPS, ma'am? Again, you have to find it from your P&L. Yeah, you have to find it from your P&L. And this one, return on investment, they are asking, ma'am. How do I find out return on investment, ma'am? Again, it is a relationship between your P&L and the balance sheet. Ma'am, fixed assets turnover ratio. You are getting it? So all these things will be coming, will be from your financial statements. Yeah, now we will see one by one what is the component and all those things. So here framework means what is it? It talks about earnings per share. Yes, EPS means earnings per share, right? So how do you find out EPS? That then again you have to go to your net profit after all the dividend, taxes and everything, whatever is available to the shareholders, divided by number of equity shares. If it is to the equity shares, the number of equity shares. If it is to the preference shares, so you will be doing it, correct? So that is called earnings. We will see that when I go to ratio analysis, not to worry about it now. Now coming back here, so what is meant by framework? What does it say? It talks about what and all could be called as financial statement, and what is the objective of it, and what are all the assumptions, how you will be preparing it. Can you prepare however you want? No, there are certain things I have to do it, and and the quality, in the quality, how how it has to be presented, what are all the conditions you have, all those things are told in the framework. And who framed this? The Accounting Standard and Companies Act has given all these stuffs. You're getting it now. Components, ideally speaking, maybe in your 12th class, or in your if you are a commerce graduate, maybe in your 12th class or in your BCom, you would have studied only company final accounts, means balance sheet, P&L, and that's it. Balance sheet, P&L you would have studied. Maybe if you are a manufacturing company, you will be having a manufacturing account, that is called trading account, you can say. Manufacturing or trading account, you can say. If you are normal, if you are not a manufacturing company but normal, or retailer, then trading account will be there. If you're IT company, then obviously for you guys trading account won't be there, so you'll be having only P&L. All right, this is how you would have studied. But remember, under Companies Act, okay, under Companies Act, they have given how you have to prepare the financial statement. So first one would be balance sheet. All right, the how it has to look also they have given. So first, if I see, I have to see the balance sheet. You are getting it. And second one, just a minute guys, I think there is some spam is going on. I'll ask them to take it out. All right, I've told them they will remove that. Now coming back, all right, second one is, I'll come to your questions, Ravi. So first one would be balance sheet. Second one will be statement of profit and loss. Second one would be what? Statement of profit and loss. Nowadays, in your 12th class, in your college, you would have studied, if you are, again I'm telling you, you would have studied trading, P&L and all those things. Remember, it is not like that. You're getting it. Companies Act has mentioned in Schedule 3 how you have to prepare. You're getting it. So it says that first balance sheet should be there. Second one, statement of P&L, statement of profit and loss for the year. So it only has whatever, whether it is a whatever you have, you're getting it, whether you're a manufacturing, whether whomever you are, it will be statement of profit and loss. That's it. So income from the operations will be there, income from other sources will be there, and then cost of goods sold, everything will be captured there. Okay, only the format will be changing little bit here and there. The accounting head, again I'm telling you guys how it has to look also, it has been told in the framework. Remember, you will be preparing in this fashion. All right, it will be, it is not like two side. All right, you would have studied like this in your school days or college days. It is not in T format. All right, it is in which format? It is vertical format. Please understand that. Yeah, it is in vertical format. So this is statement of P&L. All right, I will show you. I'll remove the company name. Right now I'm with the company name I'm having. I'll just remove the company name. I'll show you that. You're getting it. All right, statement of P&L, it will be there. Here revenue will be there. All right, now minus or once revenue are summed up, here expenses they will put, expenses head. Under that there will be cost of goods sold. There will be only five heads. Cost of goods sold, depreciation and amortization, finance charges, and employee benefit expenses, and then other expenses. That's it. You cannot write everything here. Ma'am, then how do I know? Then for that only there is something called notes, notes and explanatory items. You're getting it? Somebody has written notes to accounts to. Yes, of course, yes. You're getting it? Notes. Not only that, Baba, it includes even CFS, cash flow statement. That is what I was about to say. In your 12th class, in your college, you would have seen only balance sheet, P&L, trading account. This is called final accounts. No, not this is not final accounts now. Financial statement means first balance sheet, second one statement of your P&L, and third one would be your cash flow statement. Cash flow statement. All right. No, balance sheet is also not in T form. Balance sheet will also be in vertical format, not in T. All right. As per schedule 3, it has to be in a vertical format. It is not in T form. All right, coming back now, though in the books it will be seen, but while we prepare the statements for the signatures or for submission, it is in a vertical format, practically in India. You're getting it? All right, now coming back. So yeah, it is in vertical form. Just a minute. If you guys want to see original balance sheet, just a minute. I'll take that. How it looks, I'll show you, but I have to remove the company name. 1 minute. I'll show a simple one. Just a minute. Be online. Yeah. I'll just remove this. Yeah, now I can see. Just a minute. Able to see here? I think this is very small, I guess. Able to see? All right, it will be in this form. All right, you can see, or I'll share you with next class. I can share you the original form. This will be like this. This is how we will prepare it. Here, if you see, there is a concept called notes here. We will give notes number here. All right, only this much it will be visible when you see the balance sheet. You're getting it. Here we will be giving notes. Note number 1, note number 2, note number 3 we will be giving. And the readers will go and see there in the notes. You are getting it? Like this only, even P&L will be prepared. All right, so it will be in the vertical format, right? So what happens here? So first one, you have to prepare balance sheet. Second one, P&L. Third one would be cash flow. Then fourth one would be notes to accounts. This notes number should be visible. The notes number should be given in your balance sheet P&L. You're getting it? So the readers will go and check. All right, now coming back. So here, what is meant by balance sheet? We'll understand that. Am I live? I don't know. Am I live? I think there is some time lag, I believe. I'm not sure. All right, we'll continue then. So, what is meant by balance sheet here? Balance sheet will always talk about your liabilities and your assets. That's it. What you own and what you owe. All right. Now, so balance sheet is nothing but what you own and what you owe. You are getting it, right? So, ma'am, what is meant by owe? Owe means my liability. Own means my asset. So for you, simple, I'll tell you, if I purchase a house, house is my asset. If I purchase that house through bank loan, then bank loan is my liability and house is my asset. So that is called balance sheet. So always balance sheet talks about what the business owes and what the business own. Now students will have a doubt here. Ma'am, you said owe and own, ma'am. I understood liability. But equity is also coming in balance sheet, no. And that too, why it is shown under liability side? It is founders ka money, no. It is for owner ka money only, no. Then how come it is a liability? Please understand. I have invested money in my business. The business have to give me back something. You're getting it. I am not doing social service. Please understand. This is not an NGO. And Ravi asked, statement of income and statement account. That is not income and statement. It is income and expenses statement. All right. That is for non-profit organization. We will prepare because those guys don't have profit. Correct, because their purpose itself is what? For non-profit, your NGOs basically. So for them, your clubs, all those guys will be preparing this income and expense statement. They won't prepare profit and loss because they don't function for profit, right? I hope I answered your question. Only for non-profit companies, income and expense account will be prepared, not P&L. Correct. Now coming back here, so please understand why equity. Business is separate entity, so liability for business. Okay. Yes. Corporate is always a separate entity. All right. Don't use the word business. Use the word corporate. All right. Because if I am a proprietorship, they doesn't have a separate entity. You're getting it. Now we will stick to corporate. Company is a separate legal entity which is different from the founders, which is different from its owners. So obviously the corporate or the company have to give back, has to give back something to the owners because they have put in the money there. You're getting it. So that's the reason they are coming under the liability side. But it is not a liability. Means what, guys? I have to pay back. Correct. I have to pay back at a certain period of time because there is a timeline for my payment. Correct. No, if I borrow a loan from the bank, I have to repay within that installment. Maybe, 10 installment, 20 installment or 30 installment, like that. You're getting it. But when I put in the money in my business, it is not that it has to repay within this time schedule. I won't expect that. But something that business should grow, that at least I will expect. No, that is the reason they said it is not an absolute liability. So what name we can give? Then they got the word equity. They used the word what? Oh, good. It is equity. You're getting it. They got the word equity. Equity means it is ownership. So it is, so we will show it under liability side, but it is not a liability which is gonna be repaid or in a timely installment or which is gonna be repaid in a scheduled period. It is not like that. So, but what should I call that? So I will call that as equity, shareholders fund. It is called what? Shareholders fund. I know that I have to give back to them something, but not now or in the near. I don't know when I'm going to give, but at least I should know that I have to give. That is the reason I'm showing it under liability, and I know that it is not gonna be paid in a systematic period or in a systematic installment, and that is the reason I'm not giving the name of liability. I am giving the name of what? Equity. I'm giving the name of what? Equity. If you see your financial statement in your balance sheet, the first the heading will be like this: equities and liabilities. They will use the word equities and liabilities. If you have done commerce in your plus 2 and college, please forget all those things. Why? Because in your school and in your college, you would have studied first one under liability side. There is one heading called equity, and it will be keep on going. It is not like that. First thing itself, they will say equities and liabilities. Under that, we call them as shareholders fund. It is called as what? Shareholders fund. Remember that. Schedule 3 has clearly given the format how you have to prepare. You don't have any choice, that even the name you should use is given by the Schedule 3. You don't have right to use whatever name you like. Fancy names you cannot use there. You have, after shareholders funds, it has to be, what is it? Long-term liability. No. It is not under long-term liability. No, it will be under equities. So all your share capital, all your reserves and surplus. All right, reserves and surplus. Reserves means whatever accumulated profits, accumulated losses, whatever it is. All right, everything goes to the shareholder, na. Every year, my company is 10th year now. 10 years I have accumulated profit. Then who has the right in the profit? Obviously, the owner of the company. Owners of the company. Who is the owner? Who are the owners? Shareholders. Correct? No, so it is a shareholder ka fund. Suppose I have accumulated losses. 10 years I am in the business, but I am keep on incurring losses. I have accumulated losses. Then who has to bear it? Obviously, the owner has to bear it. Correct? No, owner has to bear it. So it is a shareholder fund. You're getting it? So equity means shareholders fund. Then comes your liability. Under that also, you have so many varieties. Current liability, non-current liability. First thing it will have come non-current, then current. Under non-current also you have so many stuffs. Whether it is secured, unsecured, all those rules and regulations are given by Schedule 3 Companies Act. You're getting it? So it is not that simply you prepare in your school days or college days. Strictly no. We will follow what is mentioned in the Companies Act 2013, how you will be preparing balance sheet. We will see all those things, not to worry about it. You're getting it? So first understand that. So balance sheet will tell me, if I see a balance sheet, I can say what a company is owning and what a company is going to pay. You're getting it? Suppose if I see a company's balance sheet, I will say, wow, they have asset, or they have a building. Wow, it is their own building. And now Infosys balance sheet, you can see they'll have their own building. They have their own, so many assets with them. Correct. And I'm seeing there at some point of time, Infosys were zero debt company. There is no debts only for them. There are no borrowings for them. You're getting it? Their company is very clean. Yeah, so there are called as no debt company. Few companies, if you see, there will be some loans. Okay, they have so much loans, fine. So they have this much creditors, okay, fine. So I can see all those things in a balance sheet. You're getting it? And I can see, okay, shareholder, how much share capital they have, okay, so much, how much profits they have accumulated so far, how much losses accumulated so far. I can see that. You're getting it? So that is called balance sheet. And second one is P&L. It is very simple. P&L, it tells me how much that company has earned and incurred. Earned the revenue, incurred the expenditure. Please remember these words. Earned, incurred. Earned, incurred. Earned means I have earned my income. Incurred means it is expense. I have spent. You're getting it? Expense. So it shows how much I have earned and how much I have spent. You're getting it? Ma'am, then income minus spent, it will tell you what is your profit or loss. Yes, of course, that's it. It tells me whether I have earned profit or I have incurred a loss. So, ma'am, then What is the difference between balance sheet and P&L? It is like assets and liabilities. You said here income and expenses you are saying, but there is some disconnect here. No, how these two are related? Please understand. Balance sheet is accumulated balances, whereas P&L is for that particular period. What does it mean? Guys, if I prepare a P&L 22 to 23, this is the financial year, correct? I will prepare. Now, what will I do? Whatever income I have earned during this period, I will take. Whatever expenses I have incurred during this period, I will take. This minus that will give me profit I earned during this period. That's it. That's it. So this is my P&L. Then balance sheet is what, ma'am? You said own and owe. So this is also during the period? No. You please go and Google it and see. Balance sheet will always have the wordings like this: statement of affairs of the business, or statement of balance sheet as on, or as at. They'll use these two words: 31st March 22, 31st March 23. You're getting it? They will do like this. They will put like this. If you go and see P&L, it will be like this: statement of P&L for the period. For the period 22-23. Ma'am, what is the difference, ma'am? Understand. Assets, though, it is not only that it will show whatever I have purchased that assets during that period. No, on that particular day, what are all my assets, what are all my liabilities. That asset can be purchased 10 years before, doesn't matter. If I own that now also, as on that particular day, it will be, both are same, both are same. As on or as at, both are same. They will use interchangeably. When a company is 1 year old, then both should be same. Why it is 1 year old? Why you told 1 year old? Whenever you are preparing a balance sheet, they'll both are same, as on or as at. Anything you can use. In India, we'll use interchangeably, as on or as at. It says on that particular day. It says on that particular day what were all your assets. On that particular day, what are all your liabilities. That's it. You are getting it. But whenever you talk about P&L, it talks about a certain period. It will not talk about on that particular day. It will talk about during this period, during a month, during 2 months, during 3 months. Quarterly statement I will prepare. So during the first quarter I earned like this. Which means what? April, May, June. During the second quarter I did like this. What is it? July, August, September I earned it so much. So P&L will be prepared for a particular accounting period. Okay, it is not on a single day. It will be for a period. Whereas balance sheet, on that any day you prepare. There is no hard and fast rule there. In case of a company 1 year old, will there be difference in balance sheet and P&L? Of course, yes, Baba. Wow. Ha ha ha. This is a very basic question. Yes, yes, yes. How come both can be same? On what presumption it is? Hey, this spam message on the. I'll tell them to remove the spam message. How you got this question? Tell me. How can it be same, Baba? Tell me that. How you are saying it will be same? Where you got this idea? I'm asking that. Okay, I'm surprised by the question. Then it gave me an idea that I should tell you what and all will come in P&L and what and all will come in balance sheet. Thank God, now next class that will be our session. You gave me the points now. So next class, guys, this is what I wanted. When you interact only, I'll come to know which level you guys are. I mean, like, where you know whether you know some basics or not, or where you are standing in the accounts, or where you are, what is your stand in this particular subject. So please interact. By that I can frame my classes. You are getting it? Otherwise I will be going in my flow. You are getting it? So please make sure that you are doing it. All right, no problem. I am here to remind you, na? So not to worry about it. We'll see that. Not to worry about it. Now I have the content for the next class. I can say in YouTube language, if I want to say, I got the content for the next class. Good. Coming back here. All right. So please understand. So as on or asset, one single day, how much ever assets you are owning, whenever you bought that asset doesn't matter. Ma'am, I bought it 20 years back. Still it is in your name. It will be there in your balance sheet. All right. I'll bring the MCQ questions, Baba, but for that, I'll bring next class. You see, you're able to answer it, because this sessions were intended for the people who don't even know basics about commerce and accounts. So that's the reason I'm not touching the MCQs now. Because if I go to MCQs, the concepts will be, you should be knowing the concepts first. Correct. Without knowing the concept, you cannot you cannot answer the MCQ. So it will lead to frustration. If the students are not knowing the subject, they don't know what is the basic also. But if I straight away, if I show the MCQs, okay, this and all will come. I'm not understanding anything. Chhod do. You are getting it. So that's the reason I am not moving to the MCQ so fast. So because I was told that these sessions were intended to help the students who don't even know what is accounts, what is commerce. Yeah, so that's the reason I'm going slow. Eva, definitely I'll bring the MCQs. Next class we'll see the MCQs. For you alone, I will bring it, not to, I won't forget. Yeah, at least from the basic concepts, we'll do some MCQs. Correct? All right. Hope that works. All right. So guys, you got to know what is meant by balance sheet and P&L. So in next class, we will see what and all will come in balance sheet, what and all will come in P&L, and how we cash flow. I won't be doing it now. Why? Because we have a chapter itself for cash flow. We will see the cash flow in that particular chapter. You are getting it? Yes, Siva. Good. All right. Now, notes to accounts. What does it mean, notes to accounts? I know it is time now. Let me finish notes alone. All right, then we can wind up. And because I started late because of this, my laptop and everything got messed up today. All right, coming back. So please allow me 5 minutes. I'll wind up. Yeah, I know it is late. Give me 5 minutes. Coming back. So notes and other statement means what? Guys, please remember, I showed you the balance sheet and P&L. It just gives you only the figures. Okay. It has a main heading. Under that main heading, you have so many clusters, so many groupings. So reader need to understand all those things. So for that, what Act is saying, Baba, you put in this format, you have to prepare. I have told you how you have to display everything. So you just give all this information. Then for that, you give a connective notes. All right. So that reader will go and read there. All right. So I will go now in the statement, they will put share capital, note number 1 lakh rupee. Now, okay, they have share capital, but who are all the shareholders? What is their paid up capital? Wow, what is their face value? How do I know? There will be a notes. I will go to the note number 1. There they will tell See, so and so is the shareholder. Ma'am, shareholder name also will be there. Huh? Yes, if the shareholder is holding more than 5% of shares, then their names will be given in the financial statement notes. All right, that is a rule. If a shareholder is holding more than, they have to disclose. The company has to disclose their shareholders who are holding more than 5% of their shares. All right, now I can, okay, these guys are the major shareholders. Ah, good, good, good. So these guys are on the shareholder list. Okay, this is the paid up value. This is the authorized capital. This is the face value. All those informations will be given. In the notes, it will be given, not on the face of the balance sheet. Now, in the face of the balance sheet, they will say fixed assets, not fixed assets, sorry. PPE they will put. All right, tangible. They will say 1 crore. Now, I don't know what is 1 crore here. Building, machinery, what is it? So, there is a note number 6. I will go to note number 6. There they will put machinery, 20 lakhs, furnitures, 5 lakhs, vehicles, 30 lakhs, building, 60 lakhs. Like that they will put. And what is the depreciation? So notes to accounts and other statement will help the reader to understand, to to interpret, or not interpret, to elaborate things what that has been given in your face of balance sheet and P&L. That is called notes to accounts or notes and other statement, and this is mandatory. Not only that, the company has to disclose what are all the policies they have followed, accounting policies, accounting, what are the estimate, how the valuations has been done. All right, how they are doing it, what are all the disclosures. I mean, disclosures in the sense like related party transactions. You will study in your Companies Act. Related party transaction, who is my director, with the director, have I done any transaction from the company, have I taken any loan from the director, have I taken any loan from the shareholders. All right, do I have any other branch, or do I have business in any other country, how much I earned in foreign currency, how much I earned in local currency, what are all the policies I am following in my company, or what are the policies I have followed in preparing this particular financial statement. All these things they have to give. It's not that simply statement. No, all these informations will be given. Everything will be given, because it is essential, it is a vital document for the investor. Please remember, it is important for the investor. How do you think that people are doing their smart investment? They will read the trend, they will read the trend by looking at the report itself. They will say this company is good, this is no, it is good, okay, yes, they'll say no trend. So how do you do that? Based on your financials. You are getting it? So these are all the components of your financial statement. With this, I'll wind up today. I'll see you on next class Tuesday. And once again, I'm sorry for the delay, guys. With MCQs, I'll come, and then with few other concepts, I will come. All right. See you on Tuesday. Have a great weekend ahead. Bye bye, guys. Good night. Again, it got stuck.